Hello there, chip stock investors. I just finished listening to the second quarter fiscal year 2023 earnings update from Aehr Test Systems. And I'm really excited about this one. I'm looking forward to talking about what I learned on this conference call, some really significant news that I lured you into this video with. So I'm going to flip things upside down from how I normally do it, and I'm going to launch right into the quarterly numbers first, and then talk about some of the newsy items here. So Aehr Test Systems beat both revenue and profit expectations in the quarter. Revenue was $14.8 million, up 54% year over year. GAAP net income was $3.7 million, or 13 cents per share. That compared to 3 cents per share a year ago. So huge jump in profitability as Aehr starts to hit more significant scale. On an adjusted basis, net income was $4.5 million, or 16 cents per share, compared to just 5 cents per share last year. So just to get you up to speed on Aehr Test Systems, we have the links to the first two videos we've done on the company below, a deep dive, and then an update on when we took some profit off of the table when this thing had shot up from under 17 bucks a share where we bought it up to well over 26 bucks per share. Check those out. But basically, the driving force for Aehr Test Systems is the silicon carbide market. So typical chips out there are made from silicon, but for the electric vehicle market, which requires higher voltage, higher heat, lots of automakers are requiring not just normal silicon chips, but silicon carbide, which can handle higher voltage. Aehr Test Systems provides the burn-in and test equipment for silicon carbide chips used in the EV market. Silicon carbide can handle higher voltage, so really critical components here. That's the driving force. Huge growth expected from this industry. In spite of all the craziness going on over at Tesla right now, lots of other automakers steadily rolling out models, replacing their internal combustion engines with an electrified drivetrain. We do know Aehr Test Systems' top customer right now is On Semiconductor. Again, we did a deep dive on a few weeks ago. Link below on that. But they're adding new customers. They picked up 2 new ones this quarter as a lot of chip makers look to increase their silicon carbide output, specifically right now, again, for the EV market, but some other applications as well. Some of these companies that are top producers of silicon carbide chips, On Semi, Infineon in Germany, Rome Semiconductor, another company in Europe, ST Microelectronics, Wolfspeed in the United States, the company that was formerly Cree. They've really kind of gone all in on silicon carbide. We don't know who all of the customers are at Aehr, but we definitely know that On Semi is the biggest, and that 2 of the top 4 silicon carbide producers right now are Aehr Test System customers. So that's what's going on at Aehr. Given the outlook for fiscal 2023, the company is still expecting 60 million to 70 million in sales. That's about an 18% to 38% year over year increase. That brings us to this really big update that management provided on the conference call. Aehr Test Systems CEO Gayn Erickson talked in the Q&A part of the call about some recent announcements from both chip fabs, some of the world's largest chip fabs, as well as chip designers. So as we've talked about in other videos here on this channel, a lot of chip companies like Nvidia, Intel, and AMD, most notably, are moving to a chiplet architecture, basically where they design multiple smaller chips all packaged together on one system on a chip. So this is becoming especially increasingly common in the data center market. Intel and AMD have also both recently unveiled new designs using this methodology for the CPU market. And Ericsson also mentioned that even fabs like Taiwan Semiconductor and Global Foundries are starting to talk about this a lot more too, and how they're updating their manufacturing capabilities to help facilitate these new chiplet designs. So here's where things get really interesting. Electrical connections between these little chiplets in a package are only so fast. And as more demand is placed on semiconductors themselves, the data transfer speeds between these chiplets are starting to get throttled. But fiber optic transceivers might be able to solve this problem. Specifically, silicon carbide optics are a very promising solution. So this is what Ericsson was alluding to. Recent announcements from the likes of Nvidia, AMD, Intel, IBM as well, Taiwan Semiconductor, talking about the ability to start implementing silicon carbide photonics into these designs. And these silicon carbide photonics apparently are going to need the same test and burn-in requirements as the electric vehicle market, because this is very expensive, highly critical infrastructure. Ericsson said that he sees this market eventually possibly being even bigger than the electric vehicle market for silicon carbide. Upwards of 50% per year growth for silicon carbide for the EV market over the next decade could also additionally be matched by the data center market, GPUs and CPUs for PCs and laptops and the like. That's obviously significant for such a tiny company like Aehr Test Systems, which is beginning to grow at a very rapid pace and realize some actual profitability from its operations. I can't emphasize this enough, though. At this point, this isn't happening yet. The photonics business for Aehr is very small. They said it was just $5 million in revenue in the last quarter. It's a huge 300% jump from where it was last year, but a lot of that has to do with the pandemic closing things down. So this is a very small business that's just beginning to ramp up. And currently this business isn't selling new test equipment. It's just the wafer packs itself for existing equipment that's already installed out there. However, it's something definitely worth keeping an eye on. If Aehr picks up some more customers, it needs to sell more equipment to companies like perhaps Taiwan Semiconductor. This could be a very significant tailwind for this company. At this point, the stock trades for about 32 times expected current year earnings, maybe based on an optimistic estimate for fiscal year 2024. That's the fiscal year that will start this May in a few more months, maybe roughly 19 to 20 times expected earnings. Ericsson and the management team did say eventually at some point, because they sell equipment and wafer packs, there is going to be a cyclical slump for their business. That isn't happening yet, but it could happen. And so maybe that earnings estimate for fiscal 2024 is too optimistic. I think at this point, the stock is fairly valued. I like it under 20 bucks a share. And I think this is a dollar cost average candidate here, something that maybe I'll just add to in little bits. But if this chiplet architecture continues to gain momentum and silicon carbide photonics picks up adoption from some of these very, very large chip designers and their manufacturing partners, this could be big news for Aehr. Definitely keep this one on your radar, and we'll have more updates on this coming soon. Speaking of the EV market, still stay tuned for the Skyworks Solutions video. They had some news on their development for the EV market and some new chips they've been designing. Make sure you hit the subscribe button, hit the bell so you don't miss a video. Thanks again for tuning in to Chip Stock Investor.